What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm going to be doing an update on SOFI stock.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up.
And in today's video, first of all, I will show you where we are on the price chart and how we get there. Then I will continue with the fundamental news that might drive the price of this company higher. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you what should we expect next. So let's start with the price chart. I made my previous video right here at this point, and I've told you that we have to have at least one more leg to the downside in order to unload the entire movement to the upside. That basically I predicted because we had very good entry point right here for algo trades and the exit point right here. And then asset moved even higher and hit the range of resistance at $7.14. And because of this resistance, we had to have another movement to the downside in order to collect more steam to hit higher targets. And my main assumption that probably we should retest even $5.75 mark, this previous swing low. But instead of this asset went high from the range of roughly $6.14. And the most important part and the most important catalyst that drove the price of this company higher was definitely their earnings report. And they beaten expectations by 11.37% for earnings per share and by 4.5% for revenue. And definitely this excitement drove the price of this company higher. And as you can see, it hit the range of about $8.5 that I marked previously. That was the range of support from this swing low. So, and from this point, this asset went lower and it hit the range of about $6 at this lowest point, and it also acted as a very good resistance slash support. For now, it acts as a support, and I marked this line back in the days, I guess about a month ago. So, what should we expect next from the technical standpoint? I will show you in just several minutes, and for now, let's continue with the fundamental news. First of all, let me show you that right after SOFI posted their earnings report, two analysts firm boosted their price targets. One of them was Credit Suisse Group and second one was MIZUHO. And they boosted their price target from $8 to $8.5 and from $7 to $8 respectively. And definitely this increase in price targets drove the price of SOFI as well. And right after that, let me show you on fintel.io, we have a major sell-off, one of the major shareholders of this company. Right here, as you can see, SoftBank sold a bunch of their shares, and for now their ownership is less than 5%. And definitely this huge sell-off drove the price of SOFI lower from this very point, because let me show you right here, their selling price was 8.17 and almost $8. And because of this, we have this movement to the downside. But for now, I have to say that SOFI hit very good entry point for the long-term investors. And let me show you some bullish news. We are on Seeking Alpha, and this article was published yesterday, and it's titled SOFI doubling down on our bullish buy rating, proving the bears wrong. And let me quote you the summary. SOFI's recent rally post FQ2 2022 earnings call has been meaningfully digested, bringing the stock back down to earth. The worsening macroeconomics also worked in SOFI's favor, proving the bears wrong and straightening our bullish stance. Investors should remain long-sided with this stock and ignore the SBC noises and the lack of profitability. Place your trust in the highly competent management team. The time to celebrate will come soon. And I will put the link on this article in the description below. This article is rather bullish on SOFI, and I have to say that we have another article on Seeking Alpha as well that was published exactly at the same date on August 23rd that is also very bullish, and it's titled SOFI Gap Closed, SoftBank Out, Load Up. And the summary of this article is following. SOFI Tech closed the gap at $6.63 after trading above $8 following earnings. The fintech could benefit from an end to the student debt moratorium on August 31st, but the business model no longer relies on refinancing student debt to prosper. The stock trades at just 3x of 2023 revenue targets, which is incredibly cheap for a business growing at a 50% clip. And definitely this excitement shows the potential of SOFI, and I've told you multiple times that ranges that are about $6 mark or below are very interesting from the investor standpoint. On top of that, let me show you another very bullish article that was published also on August 23rd on Motley Fool, and it's titled 4 reasons this banking stock is a screaming buy right now. And let me quote you these bullets. SOFI Technologies is trying to change how US consumer bank and already has more than 4 million members. Unlike many challenger banks, SOFI holds a national banking charter and can evaluate individuals' credit risks in-house. SOFI Technologies also owns a financial technology platform that enables more than 100 million accounts. And definitely, we have a lot of exciting articles on SOFI. And because of this, you have to be very cautious with the long position. Because when you can see these type of articles, definitely you might think that everything is okay with the company. But fundamentally, nothing has changed basically from the previous month. And this is only the excitement right before the potential ending of student loan moratorium. And you have to be prepared for the major movements. And that's why let's continue with the technical analysis. But before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, as you can see, we have 3 waves to the upside, and probably we might have, this is our first wave, this is our second, third, fourth and fifth. And definitely with this overlapping of the fourth wave on the territory of the first one, we violate some of Elliott wave theory rules. But in other case, we might have something like this. This might be our first wave, this is the second, and this entire wave might be the third wave. But also we are violating another rule, because internally we have to have something like this. This is our first wave, second, third, fourth, and the fourth wave, the bottom of the fourth wave is lower than the bottom of the initial third wave. This means this movement is invalidated and probably we might see lower price targets. That's why we have to be very cautious with our forecast, and from the technical standpoint we reached this range of support at roughly $6. But if I make this type of retracement, if I mark this type of retracement as ABC, we have to have one more leg to the downside, because C wave has to have a shape of 5-wave structure, and for now we have only, let me show it to you, only 3 impulsive waves without the retracement on the fourth one and without the movement to the downside to complete the C wave. That's why we have to be cautious with our long position if you want to catch the trade. But if you want to invest in this company and you've already done your own due diligence, you can accumulate on every daily red candle, and definitely your investment horizon should be longer than 12 to 18 months. So let me show you how this asset hit this range with the confluence of from the third wave. If it is the movement to the upside as the third wave, we have to project the length of the fifth wave by pulling a Fibonacci extension tool from the bottom to the top and to the bottom of the retracement. And the most probable range of extension in the fifth wave, if it happens, is 1.618. And as you can see, we have this reaction, this first reaction, we have several weeks above this range, and the next movement to the upside hit exactly this level. And that's why this asset is very technical. And what should we expect next if you want to catch the trade? Definitely we have to break some major points, and one of these points is at the lower end at roughly $6 mark, because if we'll have this type of movement, if this is the C wave and we have to complete the top of the fourth wave, then we have to land another leg to the downside. That probably might be at the $6 range as well, but most likely we might hit some lower targets. And that's why without the completion of this wave we cannot enter any of our positions. That's why just stay aside if you're a swing trader, but accumulate your position if you're a long-term investor. So I think from the technical standpoint that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed, born around rock star in this life, gonna live it up on the attack. Baby, I'm bad, I just wanna get caught up in this life. I'm crazy, I'm mad, doing no cap. Only God wants you, better go live it up.